Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Let's take stock of where markets are at this juncture. We've traded in a 155-point band in trade today. But if I remove that initial spike, it's a very, very tight band that we're operating in, just about a 100-point band. Of course, we're at the higher end of that band. If at all, I remove that initial spike, and that's the likely positive. But outside of that, let's talk about some stocks within the Nifty basket which are making moves. Bharti Airtel is doing fairly well for itself, and Axis Bank is standing out and in fact aiding the Bank Nifty as well. So that's on a couple of the gainers, but more losers than gainers, frankly, today. It's a muted set in terms of the advanced decline, 39 declines to just 11 advances on the Nifty, and you're seeing a slew of stocks across sectors sitting in the red. Infi to start off with, 1% plus lower. Bajaj Twins, both Finance and Finserv, down over 1% as well. Geofin is also down over 1%. Hindalco, Tata Consumer, Interglobe and Tech Mahindra, all of them are down anything between 1.5% to 2%. So those are some of the big losers within the Nifty pack. Also in terms of contributors, Bharti, Axis, Reliance are probably the three only possible contributors which are doing fairly okay to chipping in to how the Nifty is doing. Some of the losers as well, Infi stands out among the losers. So no real big contributors on either the gaining or the losing side, frankly. Let's talk about sectors now. The Nifty Bank, that's the one which is standing out, 1/5% higher, continues to notch highs, which is the Nifty Bank. You've got Federal Bank, which is up over 2.5% in trade today. And Axis Bank, I spoke about that, but an AU Small Finance Bank, 1.2% higher on an AU Small Finance Bank as well. A Canara Bank also sitting in the green within the PSU basket, and there's Bank of Baroda also in that basket, which is sitting in the green. So that's on the Nifty, on the Bank Nifty. The big drag in trade today is the IT index. Now, it's 3 or 4 sessions that the IT index has now sat in the red, so not looking pretty. After the kind of rally we saw, of course, so to contextualize, we're seeing a bit of a consolidation. Tech Mahindra down 2%, Infi down 1%, Wipro down nearly 1%. So across the board, there's Coforge, Oracle Fin, also among the Nifty IT players, which are sitting in the red. The Nifty Realty is the other one, which is under pressure, 1.4% lower on the Nifty Realty index. The metal index is down 1% as well. So broadly, those are the big sectors which are sitting in the red. But Kunal here to give us perspective on what he's seeing in markets. Kunal, it's not a bad day from where we saw it or what we had predicted at the start of day today. What's the sense you're getting?
Yeah, in fact, in the morning we were discussing that even if we hang around to that 26,000 mark, it should be a good day for the index, because we are trying to consolidate over here, and after this, I would say, decent rally for the index in the last few days. We should hang around to that 26K mark. The strength in the Bank Nifty is, of course, one of the more important feature of the rally. And in fact, today also you're seeing the Bank Nifty to be absolutely strong, of course, led by a mix of private sector as well as the PSU banking names today. I would probably look at this, that if there is a sharper correction across the globe, and even if we consolidate in those kind of time frames, it would be considered as a good sign for the for our market specifically. And eventually, I think over the next couple of days, there could be a possibility that many of these global markets, especially the Asian indices, they would come back into a deep oversold territory. And from there on, we could probably go into a bounce back mode for many of the indices. If that happens, then I think that should act as a catalyst for our markets also over the near term.
Okay. All right. So that's on the Nifty. But the Bank Nifty, Kunal, is surprisingly resilient, and it's led by a set of banks which are very unlikely candidates. You spoke about Axis, I believe, at some point this week. We spoke about it yesterday.
Yeah.
It's leading the rally today, at least on the points contribution on the Bank Nifty. Talk to us about that, and talk to us about what are the stocks which are standing out, because the Bank Nifty is at all-time highs or very close to that point. Where's the resistance coming in where the Bank Nifty is concerned?
Yeah, so the Bank Nifty is almost at all-time high levels, and if you look at this in the context of the last 3-4 days, it's been consistent, because the fact that we are trading at closer to 59,000 mark on the banking index indicates that the strength is still quite persistent, on the banking index. Yes, today the mix is a little bit different, but then, calling out a trend on one single day may be a little difficult. We need to see evidences over the next couple of days whether private sector banking stocks and the larger cap names, which have been underperformers at large in this last leg of the bank Nifty, whether they are trying to make a comeback or not. If we see that pattern emerging, and if we see many of the other private sector banking names participating, that will add to the positivity for the bank Nifty overall going forward. So I believe that that's an important signal which we need to watch out for. But any which ways, 59,000 is a very important pivot zone for the bank Nifty, and even if you consolidate over here for a couple of days, 100 200 points plus minus this range, I think that will be considered as an extremely positive sign for the banking index.
And IT, Kunal, that's the other one that stands out. What's happening there? Because now it's been quite a few days where the IT index has been under pressure, consecutive few days where IT index has been under pressure. What's the trend there?
Look at it this way, Harsh, that there was a 2,000 pointer rally for the IT index, 34,800 to 36,900 thereabouts. Now we have come back to 36,100 for the IT index, which means we've not even retraced 50% of the gains the IT index has shown. Now, the reason why the IT index is struggling to break past above momentum, we all know the reasons why, because there is lack of flow, news flow, event, etc. with respect to the IT names, and persistent with the kind of moves which has happened across the globe, Nasdaq, etc., which have gone through a correction in the last 1 week or so. It's adding to the pressure for the IT index. So it's a but natural kind of a movement for the IT index. What we need to see is that whether the 50% support gets broken or not. That level is around 35,800 for the Nifty IT index. If we don't break below this level, then you might have one odd day where few large cap names may falter, but the other mid cap names from the IT pack, they may try and support the IT index at large. But I think if we don't break below 35,900 mark on the spot levels, I would expect the Nifty IT index to make a bounce back pretty soon.
Nifty IT index likely to make a bounce back if those levels aren't breached. Hold on to that thought, viewers. Let's switch over on the fundamental side. Sumit Jain, Senior Research Analyst at CLSA, is turning upbeat on the Indian IT space. He believes Cognizant's latest numbers point to steady demand and strengthening BFSI tailwinds. We caught up with him at the CITIC CLSA forum, where he shared insights on the entire IT pack as well as on AI. Listen into that.
Very high expectations at the beginning of the year from US economy under the newly elected president, but I guess nobody thought of that his election agenda about tariffs and the new world order will actually pose a lot of headwinds for the technology sector, particularly IT services. And I think that's what from February, March we saw the overall sentiments turning sour because of tariff uncertainty. It started to reflect in the stock prices, and of course the guidance given by the companies in April was again a very subdued growth guidance, what we could see in the last 2 years as well. So yeah, I think this sector always has very high expectations at the beginning of the year, but then it has continued to disappoint for the last 3 years.
And add to that the AI talk.
Yeah, I think AI, to be very frank, is still very uncertain how things will play out. And we wrote a very detailed deep dive report in March, which we marketed across all the global financial hubs. And then we did extensive 2 days of virtual Gen AI access days, where we invited 14 experts across tech stacks to tell, how system integrators will have a key role to play in AI evolution. And we could sense that, there is obviously uncertainty whether the deflation on revenue will be higher than the volume opportunity or vice versa. And I think the bottom line to that is cloud as a technology took 15-20 years to where it is now, where 35-40% of workloads are on cloud now. AI, as we talk about, there is a lot of hype, which probably will get implemented in the enterprise tech stack over the next 15-20 years. I mean, if you look at the reported annual revenues from AI of, let's say, Capgemini or Accenture, now HCL has started reporting advanced AI revenue. It is just 4-5%, right, of their overall revenue. And it is probably inching up by a couple of percentage points of overall revenue every quarter. So it will probably reach to 40-50% maybe in next 7-8 years.
Okay.
So which is where I think we have to see the readiness of these companies on AI in terms of the partnership with the key tech ecosystem providers like NVIDIA on the chip side, the cloud hyperscalers. Then, with OpenAI, let's say, so we attended the HCL AI lab visit recent couple of weeks back, and they mentioned that they are the only partner with OpenAI currently where they have forward deployed engineers to implement OpenAI LLMs with the enterprise apps. So these initiatives are happening, and the multiple partnership OpenAI has announced, the way they are creating the ecosystem.
Yeah.
So how these system integrators are involved in infusing Gen AI across tech stacks, whether it be the lowest layer of infra, the middle layer, or the upfront layer in terms of SaaS or applications, that's what we need to look at. And I believe SIs will have a big role to play out there.
You have a difficult task of defending the Indian IT companies, because globally everyone's talking about AI and AI investment and valuation, and when they talk about that, they talk this as well, that Indian IT doesn't have an AI play. And you yourself said it will take at least 6 to 7 years to have that kind of play, because it's now 4 to 5% for few companies, which is there. How do you rate some of the Indian IT companies? Who will be the better one to lead this entire AI race from Indian services point of view?
So actually there are two ways to look at it. One is, in terms of the bottoms up groundwork that is required to build Gen AI applications, where are these companies positioned? And in terms of ground up work, we have identified 4 or 5 areas where data is obviously the biggest opportunity. So in terms of data lakehouse, data warehouse creation, working with the key data platform providers like, let's say, Databricks, Snowflake, Microsoft Fabric, and then the similar platform by Amazon and Google Cloud. So how are the partnerships established with these players that you need to look at in the data side? Then is the cloud hyperscaler migration and change management, because some of the companies can directly procure NVIDIA GPUs and upgrade their infrastructure stack, while some of them have no choice but to migrate their applications to cloud to have access to the GPU computing. So cloud migration capabilities are extremely important. Then the third area is the cybersecurity. We have heard multiple initiatives taken in that area. Then the next area is the SaaS integration, where all the SaaS companies like SAP, Salesforce, they have all come out with their AI agents. And they need system integrators to roll out these AI agents to their end customers. So how closely are you working with these SaaS companies? That will have a big role to play in the agentic AI launched by these SaaS companies. And then, of course, the RPA and automation. Because ultimately, if you talk about AI agents, it's a combination of a LLM, which is your brain and the reasoning model, and an RPA, which actually takes the decision based upon the result thrown by the LLM.
So how do you stack many of the Indian companies there?
So TCS in the large cap space was coming out on top in this whole analysis, where we could see that in all the 4 or 5 areas, except for SaaS integration, they have done phenomenally well. Infosys apparently has the best capabilities on the SaaS integration side, and HCL on the cloud migration side, where historically they were very strong on the IMS side, if you remember. And then in the mid-cap space, Persistent is clearly coming out on top with great set of certifications across all these platforms.
And how do you, while we have spoken about revenue deflation, which is coming into play here because of AI, how do you also look at how are these companies compensating for this revenue deflation which is coming in? Is it newer areas they're getting into? Do they have that opportunity or?
So definitely. So I think the 4 or 5 areas I talked about, right, which are the required to build the ground up for your Gen AI application. This is the new volume of work they are getting in the Gen AI world. So on one side, you have the revenue deflation, where I guess the numbers are all in the air around 20 to 40% productivity improvement across coding, app services or IMS. But actually, if you talk to the practitioners on ground, they are not seeing more than 5% productivity in the real world. Reason being, when you take this overall software development lifecycle SDLC, only 10 to 30% of the work is around coding, which is getting automated because of Gen AI. But rest of the work in terms of understanding the enterprise workflows, the overall processes, where you need the domain expertise, that is still very much required. So, which is where, the new volume of work is quite humongous. Now it's all about has the first mover advantage, and that's where they need to be proactive on announcing these partnerships and start launching client-specific solutions. So I believe AI narrative will keep changing, where 70 to 80% of the valuation of the sector will be driven by macro.
Welcome back. You're watching Closing Trades here on ET Now. And joining us at this point is Narendra Solanki. He's the head fundamental research investment services at Anand Rathi Shares and Stockbrokers. Narendra, you have the tendency of tracking IPO markets quite closely. Firstly, welcome. Wishing a very good afternoon. Some big movers within IPO markets. The first conversation that I want to have with you is with regard to Grow. There's just so much debate around the fact that Grow's market cap has breached 1 lakh crore. But if we were just to contextualize this, zoom out a little bit, it trades at 25 times its top line, or over 25 times its top line, maybe 27 times its top line, if I've done the math right. And I'm talking about trailing 12 months. Do you believe justifiable?
Yeah, good afternoon. Definitely, the kind of performance we have seen, especially after post-listing, we have seen a lot of run-up happening, a lot of different IPOs, wherein the valuation already have been at premium. So I think as far as the overall view is concerned, the valuations definitely are very rich, even at this point in time. And it would take a lot of a few quarters to actually see how the numbers pan up and how new client additions and how the overall business performs for the company and how the deliverables actually falls into place for the company in medium to long term. Then only I think we could be sufficiently be taking a call. But right now, the valuations are definitely rich. And during the IPO also, we already had a similar view that the valuations are premium and investors who are only here for a long-term haul should only apply for the IPO.
Long term, yes, I would agree, or rather, I would understand where you're coming from. But with regard to Grow in particular, now this 91% return since the day of listing, do you believe it's overdone, or do you believe investors in terms of an actionable should exit at this point from a fundamental perspective? Does that make sense or does that not? What's your target price?
See, I think it's an individual call for investors to make.
Sure.
But if you see the overall landscape, the Indian equity investment as a whole, as a segment, the penetration is very low. So definitely the tailwinds are there for the sector. And there's a lot of room to grow, not even for any particular company, but as a sector as a whole. So definitely the triggers and factors are present. And the government is also intensifying efforts in order to increase awareness of investing in equities and broader increase in investment share of investments in household savings, etc. So the tailwinds are there, but I think it's for medium to long term perspective, and that could only be justified. But right now, I think the valuations have run up ahead of time in comparison with the fundamentals.
Yeah, so that's what I'm trying to get to. Have valuations run up, and is it justifiable or not? Yeah, I think that gives a good sense. Let's also talk about the new kid on the block, Physics Wala. Narendra, what's your view on that one? It's kind of muted in terms of the interest in the IPO itself, but you look at the kind of rally that the stock has seen on opening day.
Yeah, definitely. The listing has been very good, and it was above expectations of the markets. Again, as far as overall segment is concerned, we are positive on the segment. But right now, again, here as well, we had a long-term subscribe rating for the IPO because of the valuation concerns. And post-listing, I think, again, the valuations have further become pricier.
Okay. Now, while we're talking about Physics Wala, let's in fact go across. We had a conversation with the management of the company, Prateek Maheshwari, who's the co-founder and whole-time director, to understand more about the key focus areas of the company and the future roadmap. Listen into that.
Already all those strategies are in place. Like, this month we have launched our own, OTT platform with the name of Pi. 1st of November we have launched that, and as a strategy we have kept the pricing very unique. It is like, it will improve even more access of education in the country. That is, we have priced it at 300 rupees per month. So while we are making education affordable, we are bringing more premium courses for our students. By FY28, by FY30, we are expecting 55% online revenues and 45%. So grade 9 to 12th state boards as exam categories is a focus area for the company.
All right, what we'll also do now is slip into a very short break. On the other side, we'll continue conversation all about markets, take fundamental as well as technical views. Stay with us here on ET Now. Welcome back, and there were plenty of blocks on the line today morning, and let me just talk about a couple of them. Let's start off with Paytm, where there were a whole host of sellers, including the likes of a SAF Partners. They've sold cumulatively around 2% of the equity. Emphasis, Blackstone was likely to sell 9.5% equity of Emphasis. Let's pull that one up as well. Okay, so both of those under some bit of pressure. And there's MQ Pharma as well, where promoters were likely to sell some stake. So that one also taking a bit of a knock. Well, it is 2% lower. Any of these as good additions currently on charts? Are any of these looking interesting? Paytm, Emphasis, MQ Pharma?
Yeah, I think Paytm could be a good bet at current levels. MQ, I'm not sure because I don't track the stock. So I'll skip that, but I think Paytm could be an interesting bet at say closer to 1300 mark or slightly lower than 1300 levels for the stock price, because the run up the stock has shown in the recent past has been strong. The volumes have been very strong. The indicator action has been quite robust for Paytm, and the way the stock has managed to scale past. Earlier the stock was a very high beta name. It used to have gyrations of more than 10 to 20% in a matter of few days or few weeks. But I think now in this case, the stock, the beta nature of the stock has changed. We've seen the stock to be a lot more trending, stable, gradually, moving up, stock. And I think in that sense, that's a advantage, because when you look at change of beta into stock prices, we generally expect that the stock adheres to those classical supports and the resistances side. So I think on that aspect, I would look at Paytm as an interesting bet. Closer to 1300 mark or slightly below these levels could be a good zone where traders could look at a contra buy.
Okay, so that's on Paytm. GMR Airports is the other one, absolutely flying in trade, 7% higher on GMR Airports. Of course, strong volume was one of that, but there were a slew of notes which came out, and Jefferies was the one that really stood out. They've hiked the target price on the stock. Mithali here with more on that one.
Right. Since the morning, we have seen the stock is up 5 to 6%, and there are several reasons adding up to this surge. Firstly, several brokerages have updated the views on the stock, starting with Jefferies, who have raised their target price to 115 rupees from their earlier set price of 108 rupees, while Kotak has also given a buy rating to the stock, setting the target price of 107 rupees, with ICICI giving a hold rating and target price of 93 rupees, and Citi has given a buy rating to the stock with a target price of 103 rupees. Also, GMR Airport saw a very strong trading day today, with volumes almost 8 times higher than the 20-day average. Now, this all comes after GMR reported a strong jump of 74% in its EBITDA, even though the passenger traffic was a bit soft. Delhi Airport's new traffic hike and extra aircraft parking charges also helped boost earnings in the company. Non-aero revenues like shopping, food, services added up to 13% growth, with passengers spending more at Delhi, Hyderabad and Goa airports. GMR's expansion into areas such as duty-free, cargo, parking and other consumer services is also adding to the profits of the company. Jefferies expects air traffic to improve by the second half of the year, so as the runway work finishes and airlines once restores its capacity. Lastly, GMR Airports is set to take over its Nagpur International Airport operations by December 2025, marking the addition of its fifth airport in India. So that's the reason why the stock is up around 5 to 6% today. And also, if you see the 52 weeks, there has been a surge of around 31% in the stock.
All right, thank you so much for that, Mitali, for that perspective. That's, of course, Jeffrey's view, along with a couple of upgrades and the boost in terms of volumes. I'll go to Kunal in just a minute. Narendra, do you have a view with regard to GMR Airports? Do you by any chance track this one?
No, we do not have any recommendation on the stock right now.
How do you, Narendra, let me tilt the question differently. How do you therefore play the air travel play in India? How do you play that, and how best do you think one should play that?
I think definitely the sector has been showing good growth in terms of volumes. And as we have also seen the kind of numbers which have been reported by the leading operator, Interglobe Aviation. So now I think after the run-up in the airlines, it's now the market is focusing more on the infrastructure providers like airports, as we see more and more airports opening up in the country. And the government is also very much keen on opening airports, especially focusing on tier two cities. And gradually, I think in medium to long term, the airports would also see the impact of positive impact of increasing volumes and passenger volumes across the country as the economy picks up. So I think it's now become a derivative play on the overall airline sector through the airports for the markets right now.
Okay, so Interglobe, is that the only way you'd play?
Yeah, primarily the Interglobe, and post that, I think airports can also be looked at.
Right, and do you believe that in Interglobe there's enough room for safety in terms of valuations? It trades at 45 times, certainly not cheap.
Yeah, definitely not cheap, but the kind of monopolistic exposure it brings, and the kind of growth, especially it has started its overseas operations. So there's huge runway of growth for its overseas operations. So that has to be seen. And I think the volatility which it has shown in the recent results, it should be over. It should be over, and I think the stability in the overall profit should return to the company in medium to long term. So definitely being the largest player and the kind of volume growth which we are seeing in the airline sector, there is still some room left for the growth in the sector.
Kunal, you have a technical view on this one, on GMR Airports in particular?
Yeah, I think it's an interesting chart. Just looking at the longer term structure for the stock, I think it's broken past about the previous multi-year height made in 2023-24 at 103, 104 levels. Long-term wise, yeah, I think the stock looks very attractive, and we've seen historically that when stocks have capacity to break past about the previous lifetime highs after almost a bunch of say 12 months to 18 months, that generally indicates that we are looking at a build-up of a new trend for the stock price. But then I was looking at the intraday charts for GMR Airports, and it looks like that maybe the stock at levels of 104, 105 has gone into a little bit of an overbought territory. So short-term wise, say over the next couple of days, slight bit of cool off, slight bit of correction, but the long-term structure looks extremely attractive, especially with today's breakout of a major multi-year high for GMR Airports.
Okay, all right. So that's with regard to GMR Airports. Aditya Arora, founder and multi-asset research analyst at adleytech.in is joining us. Aditya, been a while since we interacted. Good having you here. Give me a sense. We're talking about air travel at this point. Interglobe, would that at all feature on your list? What are levels you're looking for? Give us a sense.
Very good afternoon to you and to everyone. I think it's a calm day in the market. We are seeing stock-specific action, and clearly Interglobe Aviation stands out, given that it's down about 2% or 2% today. But it has been a consolidation for a long time. Almost since last 1 or 2 months, the stock has been consolidating. So the breakout for the counter is evident at 6,000 odd levels, where there are lots of call writers seen over there. So right now the stock is in consolidation phase. One should be bullish once the stock breaks above 6,000 level. There's also a gap around those levels. So So two positive triggers for the counter above 6,000 odd levels. Currently, it's a neutral candidate.
Okay, neutral with regard to charts on Interglobe. What we'll do is we'll slip into a very short break. On the other side, there's one other stock which is doing fairly well for itself. PNB Housing from the broader market pack. It's got an upgrade on its ratings. Stock was up in trade. We've seen a bit of a cool off on the stock price. We'll discuss this on the other side of this very short break. Stay with us. Okay, we continue conversation with all three of our guests. This is Closing Trades on ET Now. Aditya Arora. Aditya, let me talk to you about PSU banks versus private banks. And it's obviously it's an everlasting debate as to what one should play. But give us your take. On what side of the fence do you sit on? What do you like more?
So Harsh, if you would have asked me about 1 month back, then I would have said PSU banks.
Okay.
But today the juice is more on the private sector side because lots of public sector bank have done quite well, but private sector bank meanwhile consolidated, built it their base, and now most of them are showing signs of breakout. One of the biggest candidates in private sector bank was ICICI Bank. In the time when the bank Nifty underperformed, it was the ICICI Bank which was dragging the index. But now, as we see, ICICI Bank is inching higher. Bank Nifty is also attempting a higher high, and in fact, it's sitting at all-time high. So I think this is one of the candidates which is showing the clear picture of the index, Bank Nifty. So as ICICI Bank is showing good signs on the chart, I think the Bank Nifty index looks good. The Nifty private bank basket looks good. And I think other candidates also, like yesterday, Kotak Bank was doing well. Today, Axis Bank is up about 1.5 to 2%. That is leading the pack. So I think my conviction is on private sector side, and I think there's quite a juice left on this index. Currently, the index is trading at 28,500. I'm expecting a target of 29,000 to 30,000 on Nifty private bank space.
Wow. Okay. So, all right. So that's the take with regard to private versus PSU. What's your take, Narendra, on that?
Yeah, definitely. We have been positive for PSU banks for many quarters. And as far as our view is that, as far as re-rating is concerned, broadly, the re-rating play has happened, wherein we have seen on an average PSU banks, which used to trade at zero point 0.5, zero point 0.6 book values, have been trading at around 1 to 1.2 book values. And for a larger PSU banks like SBI, which has been trading at 0.8, 0.9, is now trading more than 1.5 times, around 2 times book value. So the larger re-rating catch-up has happened, and now it is all based on how the things improve from here on, especially how the ROAs tend to stabilize and gradually inches up. Now, coming to going ahead scenario, we are still more tilted towards PSUs because there is still some room left for performance improvement in terms of our ROAs improving a few bits more there in comparison with the private banks. And I think private banks should still, we should see some flattish performance for a quarter or so. But yeah, broadly, both are at par with some improvement still left for some PSU banks as well.
Okay, that's the fundamental take. Now, Kunal, I won't ask you PSU versus private because I know exactly where you sit on this count. Let's talk about Shriram Finance. 1 month chart, stock is up 19%. Year to date, stock is up 41%. What next for this one?
Yeah, I think it's done very well for itself. 600 to almost 900, 825 thereabouts where the stock is trading right now. It's been an excellent setup. One of the best performing stock in the entire, I think, the entire NBFC stroke HFC name. The only other name which I can maybe anticipate that which has done reasonably well is L&T Finance, which I think is on a YTD basis up almost 95% or maybe 100% right now. So that's the only other name which has done reasonably well. Still looks very strong. The entire space has been very charged up. whether you look at Chola Finance, Shriram Finance, you look at L&T Finance, etc., these stocks have done very well for themselves. The trend seems to be quite strong over here. Volumes have participated in a very systematic manner. In times when the stock was trending up higher, the volumes were pretty much on the higher side, and when the stock consolidates, the volumes naturally ebb off. That's the pattern which you've seen for Shriram Finance. So it looks to be a strong chart and indicative that minor dips into the stock price have been bought into, and continue to believe that that would be the trend which will persist for the stock.
But today if there's one star performer, that's got to be Bharti.
Yes.
Right? I mean, look at that. Look at the rest of the market and then look at Bharti. It's almost a 2% surge that the stock is sitting on. In fact, not just Bharti, I want to see Indus Tower as well, in which Bharti upped its stake as to what that stock also is doing. Of course, it's nowhere in correlation to what Bharti has done. Indus Towers today as well, lower by about a 1.5%. And that mapped with a Bharti, if we can just fire a dual chart over there, just want to see where, the comparison on both those charts are. And Kunal, come in over here, both Bharti and Indus Tower, and what's your reading?
Yeah, I think Bharti has been exceptional. The stock at 2100 plus levels. Every time I think when we look at the stock, it shows those classic sense of resilience, performance, on a consistent basis, irrespective of the markets. In the good phases of the markets, like what we've seen in the last few months, traces of index showing consistent outperformance. Bharti Airtel had done reasonably well. In even the phases when the indices struggle, for example, a case like today where the Nifty is struggling, that's the point where Bharti Airtel still manages to persist higher and continues to show signs of strength. So that's, I think, a sign of a phenomenal stock. Continues to, look strong on the near-term charts, and I would sense that this trend should continue for the stock in the near term as well.
Okay, so that's on Bharti. Narendra, do you have a view, and how would you play telecom?
Yeah, we have been consistently positive on the Bharti, and it is one of the few stocks which has shown resilience. If you see over a long period of time, and has also performed very well. Now coming to the sector, I think the ARPUs are here to improve for the sector as a whole, and I think those ARPUs to inch towards closer to 300 rupees. And as we have been seeing the news circulating around that another rate hike is due in December or so. I think this would add positive tailwinds to the sector overall. And looking at the kind of shifts happening broadly, especially in terms of data usage and data relocation, and the data center play, which the market is looking at. So there is a lot of data consumption growth which is going to happen in India. So medium to long term, the sector still looks very promising.
Okay, looking promising. That's the view on the telecom space. Narendra, I'm guessing it would be ex-Vodafone, or does Vodafone also make it to the part of the list from within telecom as a buy?
Right now, we do not have any recommendation on the Vodafone, but definitely it's one of the high risk play, and I think investors should definitely look the kind of risk is involved, especially for the Vodafone, because it has different issues which are unique to it regarding the AGR dues and the resolution of that, which is very uncertain and unpredictable at these point in time. So I think those are the critical factors for any turnaround for Vodafone to happen. But yeah, definitely the sectorally, we are very bullish on the sector.
Okay. The other thing, of course, that's happening in New Delhi is the run-up to the budget, and the finance minister met with capital market players to try and discuss issues and suggest recommendations to try and boost household savings, finding their way into equity markets, where the industry proposed cutting short-term dividend tax rate to 20%. Prakash Priyadarshi, my colleague, is here with more details on what these pre-budget meetings were all about.
Well, in a series of pre-budget meetings in the run-up to the Union Budget 2026-27. Today, the Finance Minister held a meeting with the representatives from capital markets. In fact, if you look at the key attendees, Rakesh Kumar Jain from CPI, Dhirinder Kumar Independence Advisors Private Limited joined the meeting. Along with that, representatives from BSE, MCX, Motilal Oswal, CEO, Motilal Oswal Investment Advisors Limited. He was also part of the meeting. Srini Srinivasan, Vice Chair, Kotak alternate assets. Sandeep Sikka, Chairman MFI, among others representative were part of the meeting. And sources indicate that these representatives have made several recommendations to the finance minister. A recommendation was made to keep the STT on cash transactions lower compared to derivatives. Along with that, there was a discussion which took place on increasing household savings in equity from existing 5% to 8%, of very significant development. Along with that, buyback representatives have also urged the finance minister with regard to buyback tax, where it has been urged that the buyback tax should not be levied on the total amount but only on the profit amount. Along with that, a recommendation was also made to impose short-term dividend tax at the same rate as for NRIs. Currently, NRIs are charged the 20% tax on short-term gains, whereas domestic investors are taxed up to 40%. And therefore, it has been urged to the finance minister to address these anomalies going forward. Along with that, government should consider issuing municipal bonds among the recommendations which was made to the finance minister to increase investment through municipal bonds. These are the key recommendations which have been made to the finance minister in the run-up to the Union Budget 2026-27.
Okay, that's the pre-budget meeting which the finance minister had with the capital market players, and of course their suggestions as what we're picking up on ET Now. But just looking at what else is happening in the market, of course a large part of it is in the red. All sectors are bleeding. The broader market, of course, is not in good health at all from the word go. And, the AI worries clearly are returning across the global screen as well. Look at European markets, for instance, and how sharply lower they've started off in trade. So not just a weak handover from both the US equity markets or, for that matter, Asia when we came into trade, Europe too. And across the board, you're seeing cuts of over 1% trickle in, be it a FTSE, be it a DAX, which is headed in for a 270-point decline, Stock 600 down 1.25%, or for that matter, even a CAC and a FTSE MIB, both down about over 1% as we speak right now. Important to take cognizance of what the pre-market rates for the US equity markets too are up to. While it was a weak handover, and it seems that the tech slump is weighing in on the futures as well, because the Dow futures are already down over 100 points. S&P futures as well are indicating some amount of softness, and that's the case with the Nasdaq futures as well, which are also trailing lower by about almost 50 odd points or so. Kunal, you read into these charts carefully. Does it seem like this could be a sustained or a steep correction that one could see perhaps for US equities?
Yeah, when you look at the Bitcoin asset class, from 1,26,000 to 90,000 or thereabouts, I think you probably anticipate that maybe there is something which is not, as simple which is going on as a correction the last.
It's a pure risk-off.
It's a pure risk-off which is happening, and that's why I believe that this leg of correction could be a little bit more different than the previous legs of correction for the global markets, because it's not as if the Dow has not gone to a correction the last 3-6 months or so, but then the corrections were almost round up towards 2,000 2,500 points on the Dow, and then whenever the turn happened, the index managed to make a new high. Case in point, a very recent, I think, start of November, when Dow had come back towards 46,000 mark thereabouts after a minor correction, came back towards 48,000 mark as a breakout towards a fresh high. So I think in that context, maybe that trend could be broken for the US indices over here, and that I believe could probably have a ripple effect across many of the other Asian as well as the European indices. So yeah, that's a bit of a concern which is emerging, and that's why you've seen sudden risk off happening across various asset classes and not just equities across the globe.
Is that true for gold as well? I've not taken a look at the charts today.
Yeah, even gold. Rupee terms, I think gold has ebbed off some 10,000 points, and silver, I think, around 15 to 20,000.
Oh yeah, I can see now. So almost a 1% decline for both gold as well as silver.
Narendra, your take with regard to IT in particular, because that will be the one sector which clearly gets influenced by all of these factors.
Yeah, definitely. Right now, how we see IT is that it's into a very important transformation stage. Like in dot-com era, we have seen the kind of transformation. So because of this AI build-up, we are currently into transformation stage. As far as Indian companies are concerned, we do not offer any kind of direct AI kind of a product portfolio at this stage right now, but a lot of companies have started investments into the AI, be it TCS, HCL Tech, etc. So I think as far as overall sector is concerned, in terms of valuations, also we are trading at near about a 5-year average. So there is very limited downside, but I don't see any runaway improvement in your profitability immediately. I think there is still 2 or 3 quarters wait which we have to do for the sector to actually show some kind of improvement coming into the earnings, especially. But yeah, from a price point of view, the downside is limited, and medium to long term, we are cautiously positive on select stocks.
Okay, Narendra, thank you so much for joining us and giving us all of those views over the last 40 minutes. We'll let you go on that note. And Aditya, Kunal, of course, stay with us. And viewers, you too. We're going to slip into a very short break. On the other side, we'll continue to take views. Stay with us here on ET Now.
Back with closing trades right here on ET Now, and just revisiting the market screen, it's the global weakness which clearly seems to be rubbing off on us as well. Because look at the way how we panned out. We started off quiet, and soon after we, sunk to almost 0.5% kind of a move. Right now as well, a little bit of a choppy. It's a little bit of a fight to stay put at that 25,950 plus mark, but unable to really hold on to that level. We are getting quite slippery around that mark. So still, as of now, at least holding on to 25,900 as we speak. Cairns under pressure, Inox Wind under pressure, Paytm down 2.5%, SBI Card down, and Cummins as well, which has slid about almost 3%. In fact, the cuts from within the F&O pool are as high as 6% for Cairns, and Paytm is down about almost 2.5%. In fact, if you talk about the gainers, there are very, very few there. While, of course, the material ones are GMR Airport, which is holding up a solid 6% today, or a Hoodco, which is up 2%. And then, of course, you've got some dominance from a couple of large cap names like an Axis and Bharti, which are also maintaining their pole position. And yes, Federal Bank is looking quite smart. It's a 2% uptick, no less, on Federal Bank as we speak right now. That one has been holding out quite smartly in trade, and then quiet for Reliance, really. That's showing some amount of resilience along with SBI. But Kunal, we were talking about, the banking pack. In the morning, you were talking about as to how the dominance and the leadership still remains with the PSBs. Should the markets correct further? Would that be the case? Or do you think it'll be back to the ICICI Bank, Kotaks and HDFC banks of the world?
No, I think the PSU banking stocks still continue to be very strong over here. And the fact that the private sector banking stocks have not performed, there is a sense that sooner or later these stocks will start to participate. But then, in terms of anticipation, it's very, very difficult to anticipate when the turn happens for these names. So I think it's always better to try and play with the existing trend. Even in the last 3-4 days, there was some inkling that maybe the larger cap private sector banking stocks could make a comeback for themselves as a cohesive pack, not one-off stocks on a given day. But I think we've seen that happening in that most of the other private sector banking names have more or less consolidated or dipped down from their last 2 days or 3 days of swing high. So I think in that sense, I would probably expect the PSU banking stocks to continue to outperform. And that's where I would believe that the Bank Nifty can continue to become stronger.
Well, as you say that, Kunal, all sectors in the red, including the Bank Nifty. So we've now slipped a little bit more, and in terms of the breadth as well, it's not looking pretty. And SKF India has this one's been a bit volatile, Kunal. Do you have a view on this one?
I don't track it, Harsha, so I'll skip it.
Okay, Aditya?
SKF India.
Yes, please.
Yeah. I think the stock has been continuously declining. Today also the stock is down about 4%. So it's making lower high, lower low patterns. So it's an avoid or a sell on rise candidate.
Let's welcome on board Dharmesh Kant as well, Head Equity Research at Cholamandalam Securities, joining in on the show right now. Dharmesh, hi, great to have you in ET Now. What is it that you're making of this risk off that seems to be somewhat playing out, led of course by correction in US equity markets, trickle down to Bitcoin, and then of course what's happening even with precious metals?
Yeah, Dr. Aisha, I think it's more of a trading kind of a sluggishness which is happening in the market, because as far as Q2 earnings rolled out, it was a tad better than what the expectation was by the time it concluded, when the earnings were concluded. And I think if you removed the Tata Motors from the basket, and even Nifty 50 gave around 10% kind of earnings growth. We were going by 8 to 9% kind of earnings growth for Q2. So that was quite encouraging. I think the market needs a fresh leg of trigger for Indian markets to, carry on from here. But the range has been 25 to 26K. And that trigger can come either in the form of tariff settlement with the trade tariff settlement with the US. And then we have, month of January where, Q3 earnings will pick up and the budget expectations will roll out. Having said that, in light of the churning which we are seeing, one thing which is very clear in the market is anything which is expensive, I mean, which is trading at a PE multiple of 70, 80 or 60 northwards kind of a PE multiple, but the growth has been restricted to 20, 25%. There we are seeing a heavy, churning happening into place. So you have to be very lucky to get your trading bets right. As far as investments are concerned, I think BFSI remains the, tried and tested sector to be in, along with defense names. The defense space is also looking pretty attractive, and some infra plays. So these are three sectors where I think there's still scope of, continued traction of bull run, even in this couple of months if you are trading the market.
Okay. Okay. All right, Dharmesh. But, let's go across to Samir, who is in conversation with Ashwini Vaishnav, Minister of Railways. And this is on the back of sources saying that Railways is working on a new bulk.
Okay. First question would be a major reform in the freight segment, especially for the cement sector. What are the two policy initiatives, and how you understand that this will help the middle class as well?
Our middle class families have a dream of constructing a good home, and cement is a major component in that. How do we reduce the cost of cement transportation? That was a challenge that we took, and our Prime Minister has always guided us to come up with new reforms in every sector. So as a part of that drive, we have come up with a reform for bulk cement transportation, by which bulk cement can now be transported in a specially designed container, which is a tank container, so that it can be filled up in the plant itself, cement plant itself. It can be transported to the consumption point. Then the bulk cement can be transported, can be transferred straight from the tank into an RMC plant or into a batching plant, or it can be bagged and then locally distributed. So this will really help in clean transportation, pollution-free transportation. Secondly, it will reduce the cost of transportation significantly. Now the cost per gross ton will be 90 paisa per kilometer for loaded container of this tank type.
A uniformity is going to be there.
Yes, it will be a very uniform. There won't be anymore, we will not have those slabs anymore, so that the terminals can be located at the place where the demand or consumption is.
In addition to this, you also have said that this will help to reduce the cost of transportation, and the bigger goal is to reduce the logistic cost. From that perspective, any estimate that you are understanding that how it is going to help not just the companies, railway revenues, as well as to the masses?
So this year, we have become the second largest freight carrying railway in the world. We surpassed United States of America, and by carrying 1.6 billion tons of cargo. Indian Railway has become the second largest railway in the world, and this is a major achievement, and the net result of this achievement is that the overall cost of logistics has come down for the country. The cost of logistics by rail is less than half the cost of logistics when you carry it by road. So when we carry more and more cargo by rail, then the overall cost of logistics for the country, that reduces. So that is the target we are keeping. This year, we hope to cross 1,640 million tons and keep growing.
And you are also encouraging private participation in this bulk cement terminal?
Terminals will be developed by the people who either transport cement or produce cement or consume cement.
Many thanks for speaking to us. With camera person Dilip, this is Samir Dixit.
Exclusive interaction with the Minister Ashwini Vaishnav himself. In fact, let's stay with railways, and QSR players are seeing healthy gains after South Central Railways issued a new circular. In fact, my colleague Snehi Shah is here with more details on what this circular is all about for the QSR players.
Well, yes, so after quite some time, we're seeing a buzz in the QSR stocks, namely Sapphire Foods, Devyani International, Westlife Foodworks. On the flip side, the stock of IRCTC is down 1%. Let's understand why. Now, there has been a recent circular from the Railway Board on 13th November, wherein the South Central Railway has requested guidelines for premium branded food outlets at railway stations. Now, this move aims to allow airport-like branded food options for passengers traveling via railways. And the circular names brands like McDonald's, KFC, Pizza Hut, Baskin-Robbins, Haldiram's, as well as Bikanerwala. Now, some of these brands are operated by both Devyani as well as Sapphire, and McDonald's, of course, is a Westlife operated brand in India. So some of these QSR stocks are doing very well. Now, these will fall under the premium brand catering outlet category. The category is added within the existing 2017 catering policy, and these stalls will exist alongside the existing kiosks, juice kiosks, as well as food stalls. Now, in terms of licensing and operations, no outlet will be allowed to be independently nominated anymore. Licensing will be conducted strictly via the e-auction system for some of these stocks. A separate e-auction segment will be created for the premium category, and outlets can be run by the brand or authorized franchise. It could be company owned or franchise owned. Either of those formats is okay. Outlets allowed only where there is demand and space for these outlets to be set up, and all licenses will carry a uniform 5-year validity period, which is the case for the existing companies under the catering law. So positive for some of the QSR stocks. It's important to remember that IRCTC already has a tie-up with Zomato as well as Swiggy for their in-seat, in-train delivery services. Now, this is going to add another shade of accessibility for passengers on that. So, on that note, QSR stocks are doing very well. IRCTC is down 1%.
Okay. Dharmesh, let me come to you with regard to this entire QSR space. It's not been the best performing sector or subsector, if I can call it that. Opportunity here for making a decent return over the medium term?
Hush, it needs to be seen. I mean, how this pans out. Definitely, this is a positive news for QSR players. And what went wrong with, say, Devyani, Sapphire, or Westlife was they went into store expansion. In dining, the unit cost, they went horribly wrong. In that, they were unable to, capitalize on same store sales growth after the stores were set in. And that's the disappointment which happened. Whereas if you look at Jubilant Food, they carried with their model of takeaway kind of a delivery, and that is where they gained, mileage from others. So I think this IRCTC tie-up is definitely a welcome move, because there again you will have a better margin and better commission with the legs of asset light kind of a model. So trading play, I think market will definitely give them a benefit for this news flow. But as far as long term, it has to be seen how much market they are able to capture. But short term and medium term, as you have rightly pointed out, definitely our trade is on. But our topic in this space remains Jubilant Food.
Okay, all right, Dharmesh. Kunal, do you have a view with regard to some of these QSR names, especially the kind of move that they've seen today in particular?
Yeah, not very much bullish on the entire pack, even though these stocks have run up over the last couple of days. But I think the likes of Jubilant Food, Devyani International, more or less, these stocks have disappointed, and we've seen time and again that rallies into these stocks have been sold into the fact that these stocks have been making new lows, even at a point when the indices are closer to the the stronger part of the resistances in terms of breakout. That itself indicates that we are looking at a sector which has been extremely weak in the near term. So, would suggest an avoid into the entire QSR space as of now.
Right, okay, that's the take coming in on what the QSR universe and some of the charts there are looking at. But just looking at the weakness today, and that clearly is in an Indigo, that's down 2.25% right now. Metals, of course, are also weak. Bajaj Finance has fallen about 1.5%. And then, of course, your Eternal, M&M, etc. as well are seeing some weak signs built in. That's where you're also seeing some weakness trickle in. For the broader end of the market, SBI Cards, Cummins, Inox Wind, Keynes, these are all names which are seeing some weakness. But again, Kunal, you can't, at least within the liquid universe, the mid caps that is, you can't really drop any sectoral trend here, right? It's very individual, case-to-case basis kind of story.
Yeah, mid cap is very, very individual, Aisha. And in fact, in the last, I think, few days also, when the mid cap index was making a new high, even at that point of time, it was difficult to call out a trend in terms of sectors within the mid-cap names. So I think except for the usual names, the PSU banks, etc., where the mid-cap end up done reasonably well, most of the other sectors, it was been very, very difficult to try and anticipate or even figure out a major trend which has been seeping into the entire sector, specifically from the mid-cap.
Aditya, what's your reading? Some of these charts, Keynes, Inox Wind, and Cummins? Okay, I'm not so sure if Aditya is still with us or not. But yeah, that's the one segment in the market where you are seeing extreme weakness. Having said that, a federal bank, Bharti, Axis, even a Shriram Finance to some degree, some of these names, of course, have been undeterred. And yeah, GMR Airport, Hudco, these have been the star performers today.
Yeah, and MHRIL, let's pull up that stock, which is Mahindra Holidays and Resorts Limited. It's a fantastic move by this stock today, 5% higher. Wonder, Kunal, what's your take? And from the highs of the day, of course, we've seen a bit of a cool off as well. But it's a very interesting chart structure. This was trading sub 320 earlier today. We're currently sitting at 335.
Yeah, so I think today also the stock tried to inch back above its 200 DMA, but not a great or an exciting chart about for Mahindra Holidays. The stock has been struggling for the last 2 or 3 months. In fact, a couple of months back, the stock was almost at 380 and had corrected towards 310, 315 mark. So I think in that sense, the stock is still into a downward trend. Current level wise, yes, the stock is trying to inch back above its 200 DMA, which is placed at 335 levels thereabout. So a convincing close above those 335 levels is where we can anticipate a change of trend for the stock price. But as of now, maybe a wait and watch.
Okay. Dharmesh, let me zoom out a little bit. Let me try and get your take. And you track earnings quite closely. I know that. You also track commentary quite closely. Give us 2 pockets or 2 sectors or subsectors or names where the commentaries really stood out for you and something that you absolutely didn't anticipate. These are not picks. I'm just trying to understand what themes really stood out for you.
I mean, there was no surprise, Harsh, this time around. And even if you look at IT, the commentary was muted with a cautiously optimistic kind of a stance, which has been there. Usual takeaways for the last 2 years. So they maintained that. Renewable energies were, very excited about their prospects. And I think going forward 2 years, all the renewable energy plays, be it IPP, independent power producers, or the solar module makers, they will continue to get a good, run rate going forward. But valuations are a matter of concern. So that's why we are not seeing a stock price movement. BFSI, the entire space was very encouraging, and the commentary as far as NPAs are concerned, asset quality was pretty encouraging, barring a Bajaj Finance, where the asset quality still remains a bit of a concern out there. But that looks pretty exciting. Banking space, PSU banks or private sector banks, all has been doing well. Axis Bank was the top pick out there. The only caveat I would like to throw a light on the banking space is with CRR cut rolling out finally 29th of November. So you will definitely have an elbow room of 20 or 15 bips on the NIMS front, and NIMS, the transmission has stabilized. But in case further rate cut happens, seeing how the inflation is panning out, then again you would be back to square one or single digit kind of a growth run rate. And the outlier, to my mind, in the entire large cap space was Reliance Industries, where the retail division did pretty well compared to their peers. And I think going forward, that can still be a re-rating candidate. So net, Harsh, to sum it up, BFSI stands top. No surprises there. That was a good news. At the same time, defense has been pretty good. So look at BDL numbers for HAL, BL. They all are doing pretty well. Metals are playing in and out, and it will be the case story like that. And pharma, particularly like Lupin, came out with good set of numbers. Zydus Life Sciences or a Torrent Pharma. That is one space one should be focusing on, where a lot of traction is happening as of now. But that's the sum of it. I mean, it's pretty much in line.
Right. Dharmesh, along with, of course, the outperforms, it's also important to analyze what to avoid, right? Basis your analysis of the Q2 earnings, what is it that you think A is either priced to perfection or doesn't have growth, so should be a clear avoid?
See, Asha, as far as price to perfection is concerned, I think auto space is priced to perfection now. The entire automobile space, be it four-wheeler, two-wheeler, that looks pretty much all the future growth for at least 1 year seems to be priced in. Renewable energy, again, the solar panel module manufacturers, they are priced to perfection. And barring this, if you, what's a clear avoid to my mind where a lot of I mean, hullabulla has been there is the FMCG space. So I don't think they are going to come out with miracles of say 10% kind of a volume growth with some price realization 1 2% translated into 40 50% kind of. That is very much unlikely. They will continue to be a mid-single digit kind of a growth run rate. And putting that in perspective with the valuation multiples they are sitting on. So that is one space which we are totally, avoiding for quite some time. What can look well going forward is tourism and travel and tourism industry, the hotels. So Q3 and Q4 usually is good season out there. There, I think Indian hotels can come out with a good surprise after a muted Q2, followed by say Taj GBK. So where the valuation comfort is there. So these are the areas which are looking. But clearly, FMCG one space. I mean, HUL, ITCs, Davos, and Maricos of the world should be avoided.
Is that your reading as well? Do you think FMCG and the cheer that you have had post the GST rationalization has played out? Is the story?
Yeah, it seems to because the index largely has done literally nothing. You look at the last, not just the last 1 or 2 months, but you look at this from I think the month of May or June. From there on, the Nifty FMCG index has been trading in a flatline move at the 55,000 mark plus minus 1,000-1,500 points for the for the index. And then you look at the kind of stocks which have performed in this last 5-6 months. You've seen HUL coming back into a corrective mode, Britannia, which was recently down to a corrective phase. So many of these FMCG stocks have underperformed. These stocks, some of these stocks are trading below their 200 moving averages. That's adding to the pain point for the entire sector and for the individual stocks. So not an exciting trade over here. Maybe once these stocks gain back their momentum, we can call in for a contra trade or maybe a better risk reward trade. But as of now, the charts indicate that these indices and the FMCG pack overall should try and consolidate further.
And we're slipping when it comes to the Nifty expiry day move. Kunal, would you reckon or would you be concerned at all by the move that we've made over the last half hour or so, 0.5% lower on the Nifty?
This is just the expiry day action, Harsh, which happens. I think we've just retested the intraday low, which was formed in the first half an hour, 1 hour for the index. We made 25,900. We bounced back towards 26,000 mark, and then I think we're closing back at 25,900 mark. What is concerning for the markets is lack of large cap names which are holding up. And for a market which was set up quite well yesterday, to lose the momentum and the shine immediately the next following day, that's the concern. You don't have follow through. You don't have strong support for the index in terms of large cap names which hold their fort. So I think except for Bank Nifty, and that too even specifically few large cap private sector banking, select private sector banking names and few other PSU banking stocks, you don't have major support emerging from the breadth of the market.
But Kunal, would you say that that disconnect from global markets is still on? Because like you're saying, that it's expiry day volatility, 0.5% is not really meaningful in the context of how global markets have been for the last 2 days. So are we still maintaining that decoupled state?
Yeah, so far, yes, Aisha, because look at, so if you remove the first half an hour of volatility today and the last half an hour of volatility, largely we were range bound. We were stuck at I think a 40-50 point, 0.3% for the index, which is at large a very good price action compared to that 4-5% correction which we've seen across many of the other Asian, the US indices. So I think in that context we were consolidating. But how much can we consolidate further with lack of large caps and with the falling global market arena? I think that's the concern. So right now it's a bit of a skew the markets are going into. If the global market starts to get to an aggressive sell-off going forward, then I think eventually our markets will also buckle under some pressure.
Okay, couple of minutes from close. Let's go across. Firstly, thank you so much, Kunal. We'll let you go on that note. Ashesha there to round up the day of trade.
Well, yes, Nifty is on track to snap its 6-day gaining streak, declining in trade today, and most of the pressure came in the last hour of trade. So Nifty, the chart up for you on your screens, that was
declining in trade near that 25,900 mark, down 0.5% as we speak. Nifty Bank, although was better off as compared to Nifty, but despite that, sitting with a cut of nearly 0.2%, most sectoral indices are ending with losses in trade today. They should come up for you on your screens. Only select pockets were trading with gains. Nifty Bank down 130 odd points, and Nifty Small and Mid Cap Index were also under pressure today. In terms of individual losers, let's put the spotlight on Tech Mahindra. That was the big loser on the Nifty 50 index. Interglobe Aviation and Tata Consumer were also under pressure today. That small cap index for you down over 1% in trade. Tech Mahindra down 2.2%. And on the flip side, we had Bharti Airtel, which was bucking the trend, so that one was gaining. We have Axis Bank and Asian Paints among some of the other gainers from the Nifty 50 pack. Bharti Airtel up 1.7%, Axis Bank also up 1.2%. In terms of other newsmakers, let's put the spotlight on GMR Airports. On the back of this report that came in from Jefferies, this stock was bucking the trend. Asian Paints was up 0.6%. We are talking about GMR Airport, 6.5% higher for this counter. We also had WeWork on the back of Jefferies initiating coverage report, and they continue to remain very bullish on this counter going forward as well. We spoke to the management. Their outlook also continues to remain very positive, 3.5% higher for this counter. WeWork, of course, at one point in time was up 5%, so it did give up some of its morning gains in tandem with the market, but despite that, ending 3% higher for the day. We also had PNB Housing Finance on the back of that credit rating upgrade that came in today. So that one should also come up for you on your screens, although this one has also given up most of its morning gains. Real estate stocks, meanwhile, were under pressure today. So we had Sobha, Oberoi Realty, Prestige Estates, all of them declining in trade. In terms of other broader market movers from the Nifty 500 pack, we had Bombay Burma. This stock ended with an up of nearly 10 to 11%. Bombay Burma should come up for you on your screens. Oberoi Realty, of course, was under pressure, down 2%. But Bombay Burma, Canfin Homes and Hudco were some of the other gainers from the broader markets. In terms of losers, we had Alembic Pharma. This one was under pressure. Moil and CCL products also declined anywhere between 2 to 4%. That's Alembic Pharma for you, down 4%. This was the biggest loser on the Nifty 500 index. CCL products down 3%. And Moil, one also was down 3%. So in terms of other individual stocks, we had a whole host of stocks that were buzzing. On the index level, as I mentioned, Nifty is snapping its 6-day gaining streak, and it is closing below that 25,900 mark. Harsh, back to you in the studio.
Okay. All right. Thank you so much, Ashesha, for wrapping that up. First to Dharmesh. Dharmesh, if there was one sector that you're super bullish about, okay, so we've lost Dharmesh. Kunal, talk to us about how you expect the rest of the week to unwind, given the move we've seen today. Is this an opportunity in terms of a trade tomorrow? And how do you see the index move for the rest of the week?
Yeah, it could be an opportunity, Harsh, but fourth attempt towards 26,000 mark in the last 1 month. 23rd October is where we tested 26,000 mark, and in this last 1 month approximately 4 attempts, and all 4 attempts towards 26,000 mark have failed. Earlier the retracement was 200 points, then was a retracement of more than 750 points for the Nifty. So I think it's getting a little bit of a more habitual trend for the indices to struggle at the 26k mark. Maybe I think this could be another round of corrective wave for the indices, but the only change which has happened is right now the global markets have started to correct, and they have corrected far more sharper in the last 1 week. So that could keep the markets more under check over here, and that could maybe put a lid to the index on the higher side at 26,200 odd levels. Unless the global market starts to come back or make a bounce back, and a decisive bounce back as such, I would probably expect that we may just about lie around this 26,000 mark plus minus 200 points.
I'm going to throw in one more question. IT. The move today, 1.2%. It doesn't look pretty for IT. Last, I believe, out of 4 sessions, 3 sessions we've closed in the red. One session we've closed largely flat. No real move. What next for this one? Is it a worry for you?
It's not a worry, Harsh, because there was a 2,000 point rally for the IT index.
Yes.
34,800 to 36,900. And from there now we've ebbed off 900 points so far. We've come to 36,000 mark. So which means we've not even retraced 50% of the gains which the IT index had shown. And this is start of November. The IT index had rallied up. So which means we are just trying to just consolidate over here. Unless we break below 35,800, 900 mark on the IT index, I would still call it as maybe a buy on dips category.
Okay, still a buy on dips, but lots of other weak pockets in the market today. Look what happened to realty, look what happened to auto. But we'll discuss all of that tomorrow. Seems like we're headed in for another weak day on the global markets, but let's see how the handover pans out overnight. For now, it's a goodbye from all of us right here on Closing Trades.